Good morning from each and every part of the country that you are joining this from, the country and the region. My name is Kefa Eric, one of the market analysts here at HFM. HFM, your number one financial broker, linking you to the financial markets. Now, I would like to mention that this is going to be a pre-recorded YouTube video to mean that you could visit the HFM YouTube channel at HFM Kenya, like, subscribe and click on the notification button so that you're not left out in future content that we post from time to time. You could also consider sharing so that it improves on the algorithms to allow us reach even more people and progress moving forward. Okay, so from a fundamental standpoint of view, we have experienced a number of economic data which came out yesterday, which was the 8th of January. And the economic data and from the jurisdictions that this data came from had mixed reactions or mixed numbers, where we see both positive and negative data prints from the same jurisdiction, which would contradict the narrative, the perceived narrative. Also, we see the 20-year Treasury yield in the United States surpassing 5% to show that the long-term economic improvement strategy for US to repay her debts is achievable, which is a positive economic indication. Now we are going to translate this on the chart in a short while, but before we proceed, from Australia, we had the monthly CPI indicator, which came out positive, explaining why yesterday we had a little bit of pullbacks, but generally when we go on the charts today, we will see the pullbacks are overpowered by the overall trend. We'll be able to see that. We also see retail sales coming from Euro and precisely Germany, and we know that Germany is a leader in influencing the economic situation of the Eurozone, which the month on month came out negative at 0.6%, at negative 0.6%, with the year-on-year coming out positive at 2.5%, giving us a mixed reaction right there. We see ADP, employment change, which has often reflected the non-farmers payroll, which is happening tomorrow, which we know is a key labor data telling us the number of people employed away from the farming industry, farming sector of the United States. The ADP employment change came out at 122K, which is less by 18,000 from the anticipated 140K and from the previous 146K. Now, this may reflect tomorrow's NFP numbers, not to tomorrow NFP numbers, which is on Friday, the 10th of January 2025. We'll be able to monitor this. We also had initial jobless claims coming out high. So we see a little bit of dynamism there in the labor sector of the United States economy. Later, we also had the Federal Open Market Committee, which is the Central Bank of the United States, articulating the economic situation. Data was not printed because we know generally the central banks have the luxury of conducting two functions, which is monetary policy, through ensuring favorable employment and also monitoring inflation. Now we shall be looking towards that. I think later in the month, around 19th, be able to check with the dates, we will have the release of what they think the economic situation of the state is, and it's going to be an awesome experience to see how we proceed. Will we have the FOMC, Federal Open Market Committee, cutting rates further, or will we have them slowing the rate of cutting rates amid inflation concerns, or will we have a hold at this point? So yeah, economic pundits would argue would continue cutting rates to a certain point, but without clear certainty to what degree. Having said that, when we proceed to the charts, slightly before that, also it is very important to know that today we also have quite a number of high economic data coming out from the Eurozone precisely, which is going to be kicking in during London session, East African time. That's around from 10 a.m., where we see data from CPI, Germany jurisdiction indicators are being printed, and we also have general Euro area retail sales, which informs also inflation, which is going to be coming out now around 13 hours East African time. That is in the mid-closing session of the London session. Tomorrow we are going to have the non-farmers payroll as the major grand labor data that is going to be printed. We are going to be looking out for that. If it comes out negative, as alluded by BP, that would mean the US dollar is going to weaken. If it comes out positive, it's going to strengthen. And later on, that is going to inform our market direction bias overall, arguably in majority of the asset classes. Having that in mind, we begin with our usual suspects, and we begin with the US dollar quote currencies. And for the Euro USD from the daily time frame, we see yesterday we closed to the bearish candle, possibly changing character that we are going to see from a lower time frame. We see that we did not get to the area of interest that we had called out in previous day morning market call. That was on Tuesday, and price is now printing on the downside, taking out the lows, confirming the long-term bias that we had for sales. So as long as the lows keep being taken out, as retail traders and investors would be looking out for pullbacks to get in for the continuation of the trends. For GBP USD, quite ahead of happier the Euro USD, we already in a very clear downward trajectory, coming into collision with the area of interest or support, if you may like, at 1.22998. We want to see it close below to confirm the bearish trends that we had anticipated from the previous week. If I go to a lower time frame, we see that the lows are continuously being taken out. We would wait for pullbacks for us to continue getting in for the sales. For AUD USD, of course, these are correlated pairs. We don't expect to see so much discrepancies or differences in their movement. We would notice that we are also in a downward trend. I would go to a lower time frame. We seem to be holding around the 0.61987 area of interest there. We want to see price taking out that low, and I would zoom in to see clearly. We see that price seems to be rejected around here. Price seems to be rejected around here. Would want to see price breaking below and moving to the downside. If I go to an even much more lower time frame, right, the lows to be taken out to confirm the bias for the sales, looking out for pullbacks so that we continue riding that particular trend. For USD CAD, we see we bounced off from the area of interest that we called out the day before yesterday, and prices printed to the upside, reflecting the medium and long-term stability of the United States dollar, not with certainty, of course, subjected to economic data. For gold, we seem to be breaking out from the consolidation. If we go to closer to see, we see we are breaking above the area of interest that we retested yesterday. We tested but not close above. Now price is printing above. Would like to see a kind of closure to continue with the upward trend that we had begun, where we see the highs being taken out. Now we are at the area of interest. Price closes above, confirms the bias. We keep on riding that particular trend. Now, by any chance, this is not financial advice. This is purely meant for educative purposes. Kindly do your due diligence and observe risk management. And see you tomorrow, the same place, the same time, to continue the same way that has proven consistency. Until then, God bless.